Greetings, Forexia family. Today's video is Everything is Staged. A pending US dollar crash. Now, before we get into this, I just want to say that obvious risk disclaimer. I am not a financial advisor, and everything I say is my personal opinion. You should not use any of this as investment advice. Going forward, everything is staged. For those that know me, Dylan, I personally do not believe most of what I am taught or told, most of what anybody says to me before I personally go and research it myself. Okay? Why? Because before Forex, I was introduced to a world of lies. I was introduced to the Matrix, as some people call it, or I was brought to the realization that everything that we are taught, or most of what we are taught, is to keep us enslaved in rivers or oceans of lies from where we come from, who we are, why we're here, everything. Everything is a lie. So, when I ventured into Forex, I kind of brought this with me. Okay, everything is a lie. Why is it that we are taught to trade trends, trade with the trend, trade support and resistance, trade the retest, the bounce, right? All of this retail bullshit. This is what we're fed and said, take this food, eat it, and that's how you're going to become successful. Yet, only 1%, 2%, 3%, maybe 5% of the people that actually trade Forex are successful. Why is this? Why is it that the 90%, the 95%, the majority are using the same exact tools, support and resistance, trading trends, doing exactly what they're taught, yet losing 90% of the time? Before Forex, before a lot of things, I got into psychology, hypnosis, reverse psychology, the human mind, how it works. And this helped me understand the world's biggest mind game. Because that's what we're looking at here. We're looking at the world's biggest mind game, Forex. Everything is staged. So, I have done a bit of research. If you have not gone through our previous video on the coronavirus reaction solution, which is based off of Hegelian dialectic problem reaction solution mind control tactics, that was our previous upload. I suggest you guys go ahead and check out that upload. It's extremely valuable as well. It'll help you, I guess you could say that's kind of part 1 of this video, which would be part 2. If you want to get caught up on what I said in that video to have a refresh of what's going on here. But basically, what we're looking at is a setup. Okay? This is something that has been being set up for years. Years. Okay? Something is going to happen very soon. Something in the markets is going to happen very soon. Why do I say this? First of all, let me get some basis on what we're talking about here. We're talking about a signature trade or a wedge pattern that has gotten to its point. The tip breakout, the pinnacle, the intersection point of this wedge. What is known to happen here? What is the characteristic of price when price meets this range? Well, it's almost like there's nowhere else to go. So price has to violently break out in one direction or the other. And sometimes it breaks out in both directions. That's the complex signature trade. Okay? For anybody that doesn't know us as Forexia, we have a pattern in the market that we call the signature trade. And it has two different variations, the simple and the complex. Now let me show you exactly how these different variations work. We have an uptrending market. Price gets to a high, price makes a high, it makes the wedge, and then this should be the simple version of the signature trade. Price breaks to the upside, inducing with the trend, inducing the buy, and then reverses off of the high. Inducing the buy, meanwhile hitting stop losses of anybody that's sold off of this high. This is your one chance to enter. That's where we want to enter. That stop hunt off of the high. Now that is the simple variation. Very simple. The next variation is the complex variation. Why? Because it has one or more inductions. Okay? The first induction is against the trend. The second induction is with the trend. And the final move is this, a complete reversal. What happens here? First of all, for all of those that were buying into this trend, a lot of them got their stop losses hit if they were buying into the trend right around here. They got their stop losses hit right around here. Boom. Hit their stops. Right here, when the market shot to the upside, all right, this as well, this breakout to the downside, how many retail traders are being induced by this? They think it's a sell-off as well. So retail traders start to sell in here as well. What happens? Price shoots up, hits the stop losses of the sellers, and then reverses. Simultaneously, meanwhile hitting the stops of the sellers, it also induces buyers because they think they want to go with the trend. Okay, so it's a little bit more complex, obviously. It has two more inductions. However, if you take a look, however, it is just as easy to understand. Okay? Now, what we're looking at on the dollar here is that exact move. Okay? And it's a little bit easier to see on the weekly. We have this wedge pattern And the breakout of that wedge, now remember, retail traders are taught to trade the breakout of this wedge, no matter what direction it is. So, how many retail traders were trading this sell-off right here as a sell? They got in here as a sell, thinking, oh, the dollar's crashing because of coronavirus. What a perfect excuse. And it just so happens that the exact day of the final induction was March 9th. March 9th marks the first supermoon of this year, I believe. The first of 3. Now the next supermoon is April 9th. April 8th or April 9th, right around there. We're going to look into this because all of this matters, okay? Some people ask, Dylan, you really trade based off of the moons? Are you kidding me? There is a saying called lunatics. A lot of people call crazy people a lunatic. In Spanish, luna is moon. A lunatic is someone that goes crazy during a full moon or a new moon. Why is this? Because it's scientifically proven that the electromagnetic radiation of the moon affects us as electromagnetic human beings. So, we are being affected during full moon and new moon events more than we even realize. And the dealer, the one that manipulates this market, knows this. He knows this. So, check out this trend. How many retail traders sold this trend just because it broke out of this trend line here? That is a perfect induction. That's what I'm trying to get to here. This was not the move. This was the induction. This is not the move either. Okay? This was blamed on coronavirus. This is because the Fed is now printing trillions of dollars to literally inflate the market. That's exactly what they're saying. If you go on the Fed, their site, they released an article saying they could print up to $9 trillion, and a absolutely stupid amount to prop up and inflate the markets. That's their exact words. As much as they need inflating and propping up. So what we see here is the complex signature trade, where that breakout occurs to induce the sell-off before the sell-off happens. Induce the sell-off, coronavirus, inflate the market. April 13th, there's no more inflating anymore. All right? Okay, I'm getting a little caught up here. Can't go that far yet. Let's check out our notes. Okay, price, the faster price goes up, the faster price goes down. Let's check out this. Here we see price going up in 609 days, 2,000 plus points, and goes down in 700 days, the same exact amount. So what I'm trying to say here, what I'm trying to get at here is basically price moves in an equivalent. If price goes down 1,000 pips in a day, you should expect it to move up just as fast. Okay? To reverse just as fast. Now, take that in mind when looking at this. This was a massive move, a massive pump, and it's only going to pump more, in my opinion. We're looking at the monthly time frame. This is the US dollar index, the dollar, okay? So, we're looking at the SignatureTrade, the complex version of the SignatureTrade. What a coincidence that the wedge breakout was induced by the coronavirus. So this is why I say the world is a stage. Everything is set up. It's all BS. What a coincidence that this wedge took years. We're looking at the monthly. Took years. This is since 2016. Took years to complete itself. Yet, what a coincidence that right at the point of the wedge, there's an excuse to break out. Something occurs, a worldwide event, coronavirus, to break out of this wedge pattern. You see, you guys, it's all set up. This is all BS. Now, let's check out the Euro US dollar. That same wedge pattern. Wow. Odd USD. The same wedge pattern. We're looking at this, though, since 2008. 2006. A massive wedge. What are the odds? What is the coincidence? These are monthly candlesticks, you guys. 1, 2, 3. Exactly 3 months ago, coronavirus was publicly announced. Sometime in January. What a coincidence that that's exactly the point, the intersecting point of the wedge on odd USD. The wedge that took years to complete itself just so happens to be breaking out because of coronavirus right now. I call bullshit. I call a setup, and I call that the world is a stage. This is all being set up. This has been pre-planned for years. Look at New Zealand dollar, NZD USD, this wedge. What? Are you kidding me? Exactly the same thing. 1, 2, 3, 3 months ago. Exactly at the intersecting point of this wedge, the breakout occurs. USD JPY. The exact same thing. Since 2014, they've been creating this wedge. Coronavirus, induction, a perfect induction. Now they're going to inflate the dollar, and we'll see what happens next. USD ZAR, even on the dollar versus the South African rand. Like, can you see how this is being pre-planned, you guys? It's so obvious. Now that we can see it on a monthly time frame. The point, the exact tip of the wedge, coronavirus breakout. Mass hysteria. The world has stopped to create this event. And this is just the start, you guys. Some have not even broken out of their wedge patterns yet. Like USD JPY. It's just starting. the dollar ZAR, USD CHF has not even broken out yet, but look at how massive this is. The average breakout of these is the same width of the wedge. That's what they tell you. So could you imagine what's going to happen? Anything could happen. However, we are going to pick some puzzle pieces in just a moment, you guys. We're going to get the sauce out, and it's going to be some incredible bombs being dropped in just a moment. So check this out. USD CAD, the same exact thing, same exact wedge pattern. You can see it over and over. Okay, this is interesting. These are not USD-based pairs, yet they're also forming wedges. Bitcoin. It's following the exact same pattern as 80% of all of these pairs. As if the people that are setting this up, creating these moves, were waiting for that point, that intersecting point, to happen. Waiting for a global outbreak, a global headlines to move the markets. All right, let's go back to the dollar. Let's look at some of my notes that I have for you guys, because this is the best part. All right, we have the wedge, breakout corona, coincidence. What a coincidence that they're all forming wedges, right? The induction to fake out sellers first. Yup. Because how many people were talking about the dollar crashing? I mean, so many people were talking about the dollar crashing even before coronavirus. So coronavirus is a perfect induction to get those people in and hit their stops and then move the market. Known as the complex signature trade. March 9th, what a coincidence. That happened, this happened on a full moon. One of the 3 super moons that will occur this year. The first of 3, I believe. Now, this is where it gets good, you guys. Forexia has introduced a new blog. We are trying to upload on a daily basis. As much as we can, I am uploading lots of great content, lots of education and backtesting. Boxer is uploading analysis. Human is uploading analysis. A lot of the mentors as well are uploading a lot of different education, backtesting, analysis on the blog. Keep up to date with the blog to see the latest news and education. But here is a post that I created just a few days ago. Be prepared for something bigger than coronavirus. So we're kind of explaining most of what I've already gone over in this video, except for one thing. So this is NewYorkFed.org. This is the official Federal Reserve, one of the official websites of the Federal Reserve Bank. And March 12th, they released a statement regarding Treasury Reserve management purchases and repurchase operations. So, what a fancy headline, right? Basically, here it says that they are going to start inflating the market wherever it needs to be inflated. All right, let me see. Let me try and find it. Okay, I'm not sure where it is here. It is somewhere in there, but they literally said in a surprise shock awe move that it will use repo market in a big way to try to pop up and inflate whatever needs popping up and inflating. That, they said somewhere in here. I'm not going to read the entire thing. You guys can go over it. I'll leave the link in the description or something. But that is literally their words. They said they're going to pop up and inflate whatever needs popping up and inflating. So it will offer a series of 500 billion term repos, billion-dollar term repos, at least through April 13th, amounting to $4 trillion in new money over the 4-week period. $4 trillion. So they will stop injecting cash by April 13th. The Fed will stop inflating the dollar April 13th. Does anyone think it's strange that the dollar is booming right now when everything else is going to shit? Oil going to shit. But what do you know? Oil as well has that wedge breakout pattern. Oil going to shit. US 30, right? Completely red. Completely red. This, again, this is the Shanghai Composite. This is the Chinese stock market. What a coincidence that the wedge is forming at the exact point when the world is stopping right now. What is going to happen? What could happen? Will we see a breakout? Isn't it strange that all of these different currencies, or for example the Dow Jones, completely crashing, yet the dollar is still propped up in green? So in my opinion, this is just the final induction of the signature trade right before they tank. Now, the Fed will inflate the market until March 13th, which is Easter. Let's take a look at the weekly time frame. So let's go into the monthly time frame one more time. Monthly, we're going to need, if this is actually going to play out, if this is going to crash, we're going to need this candle to close right around here, somewhere up here, okay, in this red zone. It doesn't have to close up there. Let's move this red zone a little bit, okay. I'd like it to close in this red zone, this monthly candlestick. Why? So that the next monthly candlestick, which will occur in April, will engulf, possibly engulf, that green candlestick. Now, let's go into the weekly. So, the trading weeks in April are, the first week is the 30th of March until the 6th of April. Between this time, in the middle here, April 3rd, is NFP Friday. Keep that in mind. NFP Friday. April 6th is the start of a new week until April 13th. April 13th is Sunday, Monday, the start of a new week. So this is a new week, new week, new week. I'm expecting from April 6th to April 13th a bearish weekly candlestick. Excuse me, I'm sorry, a bullish weekly candlestick. I would like to see price violently shoot up to the upside, and then for April 13th, which just so happens to be Easter holiday, a big fat red candle, or a gap in the market, okay? Now, why do it Easter? Why do it on Easter, besides all the occult symbolism and whatnot? Easter is a holiday. It will be an excuse for little liquidity. They could shut off the markets. They could literally say, okay, no, you can't trade. We're not going to allow retail traders to trade this. We're going to move it so fast, so violently, that they won't even have time to react. We're going to overload all the servers, everything. You guys, this move is, if it happens, it is going to be massive. Absolutely massive. Almost all pairs are giving the same pattern. As we've seen, Euro USD, AUD USD, NZD USD, countless more giving the same pattern. What's going to happen? Obviously, something has been pre-planned for them to create this. They wouldn't create this to not break out, right? Does that make sense? They wouldn't create this wedge pattern to not break out of it. It's going to be broken out of. Something is going to happen. A worldwide event bigger than coronavirus is going to happen. And it is going to cause mayhem in the markets. Bigger than anything we've ever seen before. So let's check out the monthly one more time. Monthly time frame. This is what I would like to see. Something like this. A big fat green monthly candle. And then the only thing that I could see being able to match the crash that we're about to see on the dollar is the 1987 Black Monday crash, which was caused by the saving and loans bubble. Just as fast as it goes up, it will go down. So that is what I have for you guys today. Last but not least is the second supermoon of this month. Not month, this year. Will be April 8th. April 8th. April 8th will be the week before Easter holiday. So it'll be this candle. The green candle before the crash. They're literally just playing ping pong. Boom, boom, boom. Alright, you guys. Stay tuned for some more information. I did compile all of this. I don't know. Is it a coincidence? Is it all just a coincidence? You know, do you want to just shrug it off and say no? It just seems like a coincidence. It's just a coincidence that all these pairs are creating wedge patterns and they're about to break out. Some of them have already broken out supposedly because of coronavirus. I call a bunch of BS. Alright, you guys, until the next video, hit that subscribe, like button if you did enjoy the video. If you want to learn more, check out the academy at backofficeforexia.net or check out what we have to offer at forexia.net, our courses and whatnot. If you want to learn more about the Forexia signature trade, check out the SignatureTrade course. We also have a free course at forexiapro.com. Find it somewhere around there. That is our free mini SignatureTrade course. Or go to forexia.net and on the home page you can find a link to that course as well. So thank you guys for tuning in. Once again, keep your eyes on the blog. If I suggest everyone that wants to have instant notifications for this blog to go to the email here and type in your email and subscribe to the blog. So we will see you next time. Thank you guys for tuning in. Peace out.